Just when we thought the rally was unstoppable, the market takes a pause. Is this a sign of concern or just a breather after a remarkable run? Good morning, listeners, and welcome to a new episode of Capital Markets Quickie. I'm Endrit Cela, here to guide you through the latest happenings in the stock market. On Wednesday, the U.S. stock market took a step back from its recent surge. The Dow Jones Industrial Average, Standard & Poor's 500, and the Nasdaq Composite all experienced declines of over 1%. This slight retreat follows a period of strong gains, including the Dow achieving its fifth consecutive record close just the day before, and the Standard & Poor's 500 inching closer to its all-time high setback in January 2022. Investors have recently been brushing aside more hawkish tones from Federal Reserve officials who have been hinting at a more cautious approach to lowering interest rates. But the market's optimism is being tested. In global economic news, a surprising drop in UK inflation to a two-year low sparked a wave of optimism. This, coupled with a decrease in German wholesale inflation, suggested that price pressures might be easing in some of the world's leading economies. This view was supported by the continued decline in bond yields, with the 10-year Treasury yield dropping below 3.9%. However, some analysts are raising concerns. They question whether the anticipated faster and earlier rate cuts by the Fed could inadvertently lead the U.S. economy into a downturn. The upcoming economic data releases will be crucial in assessing the potential for a soft landing by the Fed. This week, we're anticipating an update on GDP, followed by the PCE inflation reading on Friday, which is the Fed's preferred inflation metric. In corporate news, FedEx saw its shares take a significant hit, falling over 10% after the company reported quarterly profits below expectations and reduced its full-year revenue forecast. This slump is partly due to a decrease in demand from the U.S. Postal Service. As we navigate these choppy waters, it's essential to keep an eye on the broader economic indicators and the Fed's policy moves. That's all for today's episode of Capital Markets Quickie. Thanks for joining me, and I'll be back tomorrow with more insights and updates. Have a great day.